Hey everybody, this is Jim at SP500chart.com. It's about 4:20 on March 14th, 2013. Surprise, surprise, surprise. The markets were up today. And actually it comes as no surprise, though we'd all love to see a pullback. Let's take a look at the S&P 500 chart, but before we do, let me see if I can get this all said in one breath. Hold on. The website in this video forget it. Let me try it again. Need to remind you that the website in this video are for educational purposes only. Nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I am just a guy who draws lines on charts. Let me see if I can do that tomorrow. I'll go in training. Tomorrow I'll do it. Let's take a look at the chart. Okay, looking at a 30-minute chart. Before we look at the chart, I want to share something with you about my personal feelings. As you know, I am mostly in cash. And every day I feel just a little bit stupider for being mostly in cash. But I also know that that's the way the markets work on your head. They make you want to be in right about the time when things start to head south. How many of you out there, let me see a show of hands. I've seen it so many times on message boards on other stocks, and I've done it myself. People will say, as soon as I bought the stock, it went down. Okay? Or you short, and you go, as soon as I shorted the stock, it went up. Why is that? Well, because the markets are unintentionally designed to pick on people who want a safe thing. It's the people who risk who are rewarded. And when the markets keep going up and up and up and up, and you finally reach the point to where you go, gee, this thing's just going to keep on going up. Guess what? That's when everybody figures that out at the same time, typically, and you get a little bit of up, and then all of a sudden there's nobody else to support it. So, I am waiting for a pullback. That is my mantra. This is day 10 of the Dow, having closed up for the last 10 days. And as impressive as that may seem on the surface, you can see that almost a third of that gain took place on this gap up right here, and really it's moved from roughly the 13.960 range up to 14.530. Roughly 580 points, which translates to about 4%. Now, don't get me wrong, 4% is a nice move, but I would describe that more as a melt up. If we look at the S&P and we go back over the same period of time, we see we started about 1502, and here we are at 1563. Less than 4%. And again, a lot of that was right here on that gap. About 20 to 25% of the gain was to be found in that gap up. So, technically speaking, where are we? Well, we're real close to meeting the minimum expected target from this inverted head and shoulders pattern. And like I said, the thing that's really kind of kicking me in the pants right now is we never got a pullback. So really, this was a pattern that I just get to watch, because I would expect a pullback from this, and I'm kind of a perfectionist. Maybe that's a fault. And so I'm thinking, hey, if we come down to 1530, 1528, I'm in. Never get there. Instead, it appears that this target will be met, and tomorrow will likely be the day that it's tagged, And if it goes up to that point, tomorrow may or may not finish in the green. I think it will. I think at some point tomorrow we will be in the green. But look, we've had this little blue channel, albeit a very aggressively slanted channel, and this guy did break down, not by a huge margin, but it's showing signs that this line has been turned into resistance. If we look at the trading today, you can see that here's that line again. We came up to it on the morning rally on the jobs news and then have gone sideways. What's kind of interesting is, let me show you something I picked up for what it's worth. If we look at what happened at the beginning of the year, gap up, we're in a channel. We did eventually break the channel. Then what happened? We gapped up and then we went into another channel. Okay? Then that channel started to show some weakness. Then what did we do? We gapped up and now we're in another little channel. That's just kind of interesting. So that means we've had now 3 instances in which there was a gap up followed by an immediate sort of almost a melt up. And I don't know what that means. I'm sure there's some psychological implication to that, but I don't know what it is really. I can tell you this, that as the headlines begin to speak more and more about record highs in the markets, I'm not going to call a top here, but I'm going to say this: be aware that markets don't make tops when people are still worried about things. Markets make tops when everything is going great. The top that preceded the Great Crash, that kicked off the Great Depression. Everything was great. People thought that you couldn't fail if you put money in the markets. And there was a euphoria that was present before that crash. Look back at the tech bubble back in that burst in 2000. Everybody was euphoric. Man, you can't lose on these stocks. And look, the NASDAQ is nowhere close to being where it was. So, guys, I'm just saying that as the headlines begin to speak more and more about just how wonderful the markets are, you need to realize that there are people who have been on the sidelines just wondering, when's a good chance for me to get in, now bolstered and emboldened by the headlines. Now is likely when they're getting in, and that's probably why we're seeing this relentless climb. But my guess is that smart money is, if it's not already out of the markets, it's looking for the exit. So I'm not going to tell you what to do with your money. Just be careful, because we could be near a top. Now, I mentioned yesterday a couple things that make me kind of give me pause. You know, when I look at the S&P chart, if we go back out and look at a 9-day chart, I mean, you can understand why when we look at this line of resistance that's up here in the mid 1500s to currently right at 1600. If we look at that line right there, if we also you could just look at that and go, gee, you know, what would you do? I mean, if this were a stock you were in, and instead of looking at a 9-day chart, you were looking at a daily chart, you'd probably look at this and go, hey, you know something? I think there's going to be some selling when this line gets hit. And I tend to think that there should be some selling when that line gets hit. By the way, you might look at this line right here and wonder, what the heck is that all about? Well, I'm just drawing this because if the S&P ends up being something that we look at years from now, and we wonder what was going on during this period when we had 1, 2, 3 runs up to this level, there's a couple of different interpretations of this. If you're a chartist, and I have to divorce myself from the tendency that is the common thought, and the common thought is the markets in the United States always go up. But what I want to share with you is this. If I just divorce myself from the notion that the markets always are on this inexorable march upwards, and I were to look at this chart, and I look at this formation that has taken 13 years to form, if I were just looking at this formation, I would say we are either making a wicked triple top, or we come down for one more good dip, and then we come back, and this whole thing becomes one mother of an inverted head and shoulders continuation pattern. And if you might say, well, isn't that speaking a little bit out of turn? I say, well, maybe not, because if we go back and we look at what happened through the late 60s on through the early 80s, the case could be made, even though it's not a very clear pattern at all to my eyes, the case could be made that what happened for this 10-year period about, or we could maybe say right here, but you could make the case that this also served as a continuation pattern, though it really didn't have quite as clear a top on it as what we're looking at right now. So guys, I'm just that line is there looking way out into the future. For right now, we just have the next week or so to think about. And right now, we are very close to making that inverted head and shoulders target, which is roughly 1565, 1566. I think if the markets were to turn south and just the wheels were to fall off tomorrow, I would even make the case that 1563 is darn close enough. But I do think it will make it. And going forward, I believe this 1496-ish line, 1500 line will be important. At some point, there will be a correction in the markets, and the correction is liable to be something that comes down to make a meaningful test of support. It's done it every time we've had a run-up. We are now just currently in a run-up. And there will be a leg down at some point that will scare the bejesus out of everybody. And that's what I'm waiting for. So, there you have it. That is pretty much it. All I can say, if you want to put it in a nutshell, back test on this blue line, very close to making the minimum target from our inverted head and shoulders pattern. I have some satisfaction in having seen the pattern, and we're seeing it work as it should. But like I said, I'm feeling a little stupid for not having been all in when this break took place, but I'm not going to let that sway me against my better judgment to not chase, because we're seeing some signs of weakness here, and I'm not willing to chase it no matter what the headlines say. But you have to do what you got to do. All I say is, be careful. When the headlines start to rope you in, that's a time to maybe start up the little contrarian thinking method of looking at the markets. Look, guys, appreciate you taking time to watch the video. Thank you for your support, and look for the video over the weekend. Since this is Thursday, our next video will be issued at some point over the weekend as the weekly review, and I think it might be an interesting week for us to look back on. So hope you'll check that out. Thanks again.